Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Ken Nakamura, head of Stablecoin at Gmo Internet, a publicly traded Tokyo-headquartered internet and finance company with 141 global subsidiaries, to discuss wide-scale adoption of blockchain technology and digital assets. Ken, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
And Ken, tell us about Gmo Internet and how the company is establishing a U.S. presence as a blockchain technology and digital asset space.
Yeah, so the company was established back in 1991. We do everything related to internet services. We got into financial services 10 plus years ago with the largest FX platform, regulated internet bank, crypto exchange, etc. And we got into the crypto space about 2.5 years ago, starting with the Bitcoin mining crypto exchange. And then now we're working on the launch of our stable coins. One is backed by the Japanese yen and one is backed by the US dollars.
And momentum is really building for wide-scale adoption of blockchain technology. In fact, over the past few weeks, there have been several announcements with companies like Square and PayPal that helps the advancement of digital assets. Why do you think this space is gaining so much traction?
Yeah, I think there's three aspects to this. One is the announcement of Libra last year. It really raised the attention around CBDC stablecoins, and it served as a catalyst for global monetary authorities to take this conversation really seriously. And then the COVID hit the global economy, right? So it really depends on the country, but looking at the US specifically, they've issued trillions of dollars as a stimulus package, and more of a forward-thinking people are hedging against their sovereign currencies, US dollars, euro, Japanese yen, whatever it is, and getting into the crypto space. And then there's finally the DeFi hype that really, because of this, the stablecoin adoption really skyrocketed. People are earning high yield through the DeFi platform. And we can also not forget about the CeFi space as well. Companies like BlockFi, Celsius, you place your stablecoin in their platform, you start earning over 10% annual yield. So I think that's these are the three aspects.
How are stablecoins different than other digital assets, and why do you think they can lend to more stability in the space?
So stablecoin is generally, there's different kinds of stablecoins. Ours is obviously backed by the fiat currencies, strictly pegged with the fiat currencies. Some are algorithmic, some are pegged to commodities. So the concept of stablecoin is to really keep the value stable, whereas Bitcoin, other cryptocurrencies are super volatile. And by just holding on to it, your capital increases and decreases all the time, right? So it's a really good hedge instrument if you're a trader in the crypto space, because the crypto space is really driven by trading activities currently.
Well, Ken, clearly everyone's concerned about the U.S. national election and the impact it could have on virtually every asset class, industry, the economy, social issues. Do you think the outcome can impact crypto adoption or digital assets in any way?
Yes, I think in general it'll have an impact in the overall economy. So it used to have a very close correlation to how the equity market moves. But with the recent announcement from PayPal, it really broke the correlation, which is a good sign for the bulls in this market. So whether equity market sinks or not, I think the crypto space the activities in the crypto space will be much different. There's going to be not too much of a speculation like we're seeing right now. There's going to be more and more actual use cases, which will drive the blockchain and digital assets ecosystem further.
That's a good point. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.